reading from the article that is coming. That's what at least one financial expert is saying. Charles Brown of CB3 Financial says,
one of the brilliant moves that Kmart has done is to partnership with Facebook in these e-gift certificates, so you can actually...
Of government mismanagement. Charles Brown is the president of CB3 Financial Group. He joins us this morning from Chicago.
Significantly dropping. Basically, this is the year of the consumer.
Believe that they're capable of managing anything?
Well, it's sort of like handing the keys to the chicken coop to two wolves.
Good evening, everyone, from Chicago. It's Thursday, September 17th, and I'm your host, Charles Brown, Portfolio Manager with CB3 Financial. We're so glad you're here with us tonight. This is actually episode 57. We've been doing this a long time. Actually, I said that wrong. This is 27. There's 52 weeks in a year, and 26 is the halfway point. So tonight, we are starting the second half, and we're really excited about that and glad you are with us. From COVID to clarity, this is CB3 Live. Tonight's top three, Corona America. The vaccines are getting closer for all of us. Stocks still correcting from their highs, and the 2020 political campaign update. What is happening with this virus? I tell you, this is 2 weeks in a row now that the deaths, that's highlighted in green. No one wants to see any deaths, but it's in three figures instead of 4 or 5. 2 weeks in a row, we're just under 30 million cases worldwide, an increase of 36,000 cases yesterday, but that's actually good because it means people are getting tested. Here's the reality. A lot of people are going to get this. I think half the U.S. population is going to get it, but I believe the herd immunity has been built up or will be built up so that very few people will have a very serious reaction to it. That's what I gather from this data with seeing the number of deaths continue to drop week after week. Now, because we're heading into October in just a couple weeks, we didn't have to worry about this coming out of winter heading into the summer. We knew if we had symptoms, it was COVID, but now we have to be able to tell the difference between COVID and a regular flu. And the reality is that there are a lot of similar symptoms, but the difference between them is significant. So look at this screen that I have for you here. Maybe take a screenshot on it when you play it back. A worsening of chronic medical conditions is what happens with COVID. The flu is usually going to be gone in a few days to less than 2 weeks, but COVID can get into blood clots, veins, your heart, palpitations, legs, lungs, and brain. It is obviously very, very serious. So test if you have any doubts coming into flu season here. The news continues to be promising with Moderna and Pfizer. I mean, Moderna's COVID-19 candidate here, while there was a sharp sell-off in the last 2 months with the stock, remember we've talked about this, that great stocks do not necessarily equal great stock prices. But right now, they are still looking like the leading candidate, although Pfizer and BioNTech have submitted an amended protocol to the FDA. If you remember, they were shut down a few weeks ago for a few days, and they are now in phase 3. That's just before the emergency granting from the FDA. Now, this is not going to be a full granting before these vaccines are passed out. It's definitely going to be an emergency grant. So Pfizer's CEO, relatively rare that any CEO speaks up, but he is saying, we expect to be distributing our coronavirus vaccine to Americans before the end of the year if it's found to be safe and effective. Well, he wouldn't be saying that if he didn't think they were very, very close. 60% chance of knowing the efficacy, still an experimental stage, right? These are going to be emergency grants, but still, that is definite progress from when we started 26 weeks ago on March 12th. So the public health authorities across the country are waiting for this, obviously, and I don't think it's going to just be one vaccination. I think that there are going to be several. I think that what's going to happen in the testing is that there are going to be specific age groups, specific pre-existing conditions, even specific races that react differently to the various vaccines. And this is going to be a very complicated and in-depth rollout of one or more vaccines. Separately from all of this, researchers at the University of Pittsburgh have found the smallest biological molecule that completely and specifically neutralizes SARS-CoV-2, which is the virus that causes COVID-19. Now, that's not anything that can actually be put into a medication, but at least we are continuing to gain an understanding of this horrible, horrible pandemic. And I wasn't able to tell you this until just 2 days ago. So really excited about that. And yet we still have mischievous behavior on these college campuses. Iowa State started classes with a 13.6 infection rate, jumped to 28.8 because of large parties, gatherings. Undoubtedly, fraternities and sororities getting back and having parties and not distancing and not wearing masks. And that's what happens. Just really, really dumb. And yet, just yesterday, the Big Ten has announced they will restart their season. Now, they're not going to start till October 23rd, which is a Friday. So nothing is normal this year. There's going to be football on Friday and Saturday. There will be only conference games, so no non-conference games, shortened season. But the goal is then, they don't think they're going to have the bowl games, but at least the championships. Now, this is huge. If you think of it, here in Chicago, you guys, wherever you are in the country, you may have a great team. Well, in Chicago, Evanston is our college, and Northwestern has not really been a powerhouse, at least for many, many years. But in 1882, that was the last time that Ann Arbor, the Michigan Wolverines, didn't play a season. So this is pretty big news, I think, from a morale and an economic point of view. Now, I talked about this last week, but I just want to give you an update on this. Let's say that 2 or 3 of these companies come up with vaccines. How are we going to dispense these across the globe? Has anyone thought of that? The largest single transport challenge in the history of man is coming up here, mankind, if you will. Just providing a single dose, and mind you, some of those people who are very seriously infected will need more than a single dose. But just providing a single dose would require 8,000 747 cargo aircraft. That's going to take a half a year. So this just can't happen too soon. The sooner, the better. And then we will be talking about on our program how the vaccine is going to be distributed to the greatest number of people in the shortest amount of time. It should be a very fascinating study. Now, this is not something that I bring up casually, but this is a Chinese virologist that fled the country in May and has only just recently told her story to Fox News. You can see it. You can do a screenshot here and go and see the playback on Fox. But she is contending that this virus absolutely did not come from open food courts and was created in a Chinese lab. So I think that it really doesn't matter on today's date because we have the current pandemic, we have the elections, we have social unrest, we have trying to prepare, just as I said in the previous slide, how are we going to get this vaccine into the hands of the most needy and the most number of people? But at some point, there is going to have to be an accounting on how this happened, one of the greatest travesties in human history from a health perspective. So, I'm sure you guys have questions on this, and I do too. I am wondering how expensive this virus not how expensive the virus is going to be to mankind, but how expensive is the vaccine going to be? How are we going to pay for this? How are we going to get this in the hands of those less fortunate? And I found some answers here, and I hope you guys will get some answers too.
A coronavirus vaccine is seen as a key weapon against the pandemic. But how much will shots cost in the US? Some companies have said that a dose could sell for as little as a few bucks to as much as $25. And that vaccines may actually be available fairly quickly by industry standards, meaning less than 2 years as opposed to more than 10.
It's called Operation Warp Speed. That means big and it means fast.
Of more than 160 groups racing to put a vaccine on the market, a handful entered the final testing stage within the first 6 months. That's much faster than the usual process, which can take years. And that's in part thanks to U.S. government money. The administration handed out more than $10 billion between March and August.
There's an expectation on the public's part that the drug, because it's been funded partially by taxpayer money, that the price will be reasonable.
But investors have also poured funds into drug makers, and stocks at some pharma companies have soared. That's putting pressure on big pharma to make vaccines affordable while also keeping investors happy. We wanted to know, what does that mean for the final price tag? Developing a vaccine is a huge gamble. Getting it from the lab to clinic can cost billions of dollars, and not all of the companies that are developing vaccines will end up with a viable product.
Of all of the vaccines that start human testing, about 66% of them will fail.
Kenneth Caton studies drug pricing at Tufts Center for the Study of Drug Development, which receives grants from the pharmaceutical industry. He says vaccine R&D is something few companies can afford.
Not a lot of companies actually invest in this for a variety of reasons. One of them is the poor likelihood of success and the difficulty of generating revenue on whatever R&D activities they have.
But in the case of the COVID-19 pandemic, government money is taking away a lot of that risk by funding vaccine research and development and signing contracts to buy the vaccines before they're even approved. 2 government deals with Moderna and Pfizer would secure as many as 200 million doses by January next year. And that would mean both vaccines would be free of charge to people in the US, at least initially. To speed things up, pharma companies received additional funds for manufacturing and are already mass-producing vaccines while still conducting clinical trials. Michael Kinch is a biochemistry professor and a vaccine historian. He says producing and storing vaccines can be very expensive.
Under what conditions, what temperatures and humidity, and a number of things that, again, oftentimes can take years to develop. It might be that we find out that certain conditions ruin a batch of vaccine.
There's also a parallel scramble to secure billions of medical-grade vials and syringes that are just as important as clinical trials. And the U.S. isn't the only country trying to secure doses for its citizens.
Assuming that there are just 7 billion people, which is probably an underestimate, and that each one perhaps needs 2 doses, you're talking about a monumental logistics challenge of being able to create double-digit billions of different vaccine doses.
Manufacturers of glass vials have estimated that worldwide demand because of the pandemic will increase by 2 billion over the next 2 years. Since most of the medical supplies are sourced overseas, the U.S. government is giving American glass makers and syringe suppliers federal contracts to ramp up production. Some Americans are hesitant about taking a COVID-19 vaccine because of concerns that development is being rushed. To allay those concerns, several industry rivals are planning a joint pledge to not seek regulatory approval until the shots are proven to be safe and effective. Despite the hurdles, some companies are joining the crowded race because they already have the technical capabilities to do so. For instance, Novavax says it makes business sense to repurpose the technology it uses for a promising flu vaccine to develop one for COVID-19. Plus, financial backing from not just the U.S. government, but also various countries and nonprofits have also given companies more of an incentive to chip in than ever before. In return, companies may get positive coverage worldwide for stepping in during a pandemic, or being one of those to find an effective vaccine. Lawmakers have said that drug makers should be held accountable to taxpayer dollars. Some companies have said their vaccines will be priced at cost because of the current crisis.
We will be providing vaccine at a not-for-profit price during the emergency pandemic phase.
But Pfizer and Moderna have said they still intend to make a profit.
We will not sell it at cost.
Kenneth Caton from Tufts points out that some pharmaceutical companies with portfolios of blockbuster drugs should be able to absorb the cost of the vaccine. Sales from these products can help take away some of the pressure to profit from a single coronavirus vaccine. Meanwhile, the government is working with commercial insurers as well as Medicare and Medicaid so people won't have to pay out of pocket. There's also a government plan to help fund the vaccines for the uninsured. Black and Latino communities have less access to healthcare than white people. And they've been dying at disproportionately higher rates during the pandemic, while also making up a large part of essential workers at greater risk for exposure to the virus. So a free or affordable vaccine would be one of the best ways to protect the most vulnerable and return to some level of normalcy.
Now, that last little bit of the video was what I was referring to earlier. I am very hopeful that we're going to have multiple vaccines, and some that are even specifically addressing what we know now is higher infection and even higher morbidity among people of color. And it's something that I really hope is going to get addressed very, very soon. So what do you guys think? Now I would like to get some input from you. How soon will the COVID vaccine arrive? Answer A is within the next 60 days. Answer B is within the next 30 days. Answer C, it will arrive within days of the election. Answer D, I'm really not sure if much progress has been made. So we're on about a 20-second delay here. You guys type in your answers and I'll answer anything in the chat. Yes, Nellie, you're correct. Many are saying they won't get vaccinated. About 52% will and 48% won't. And you are correct that a large majority of the people who say they won't are minorities. I don't think there's going to be any requirement. Good evening, Kay. Good to see you. Long time no see, Kay. I just said that because I did a special presentation for Kay's networking group last night. So we've got a D. Not sure much progress has been made, Tom. It'll arrive. And I don't know if that's cynical or not, Nellie and Alice, but I think I'm with you. Hey, Dr. J. Within the next 60 days, I think so, because it's been pretty strongly promised within 30 days, and I think that's true, Kay. So, yeah, so that's where it is, guys. Thank you, Keith, for that within the next 60 days. Something tells me it's going to be October 24th. I could be wrong, but that's what I think. So we've got an A and a C from Larry and Connie. Okay. Well, we will know soon enough, and we will be looking back and reviewing this, guys. Let's go ahead to the U.S. economy. The NASDAQ up 21.6 for the year. Now, remember, we were up close to 30-something, whatever it was, 32. We are still in the middle of this pullback. S&P remains up for the year. Dow is back to being negative. Russell down 7.5. Hey, Karen, good to see you there. We still have this spread of 29% between the NASDAQ and the Russell, but that is less than it was. So how do I look at this and see good? Because to have a successful secular bull market, all the asset classes have to be participating. So the narrowing between the Russell and the NASDAQ is actually a very positive thing. Another positive data point here, you see this continuing drop in unemployment insurance claims, and today came in right at the forecast amount of 875. That's why I didn't change out the slide. So it was right on target, and it continues to drop. We still don't like this really high number, when the normal number on a weekly basis is between 200 and 215,000. So 875 is 4 times that, but look at the trajectory. That's what we've been saying on this program. We want to see the trajectory keep moving in our favor. So change in employment, lots of changes in the service sector. That's waiters, waitresses, people working at amusement parks, on cruise ships, flight attendants, people working on airplanes that are, getting the planes out to the runway. Massive drop, but look at the correction. It's coming back. There was far less of a change in those that produce goods and services. But I like the trajectory of this brown-looking bar here because it's coming back. Federal unemployment benefits, now those skyrocketed once the PPP, the Payroll Protection Plan, came out, and now they've dropped off as those benefits ran out. So with those benefits dropping, what does that mean as far as people's spending patterns? Well, what you're seeing here is the blue line are those that were working and have stayed employed, never lost their jobs. The people who did lose their jobs, as you can see, their spending dramatically dropped, but then it's dramatically picked up because of the benefits they've received. And now you're seeing for the first time, it's the first time I've shown this chart from JP Morgan, where the, I don't want to say class struggle, but there is some truth to that. The people that are getting paid to stay home are spending more, and those that are working are saying, hey, this isn't right. And again, there's so much going on that needs to be repaired that there's a lot that's not being addressed here about this inequity, but history will go back and analyze it, I assure you, but that's the data. Retail sales did slow down, so we are still seeing positive data. Motor vehicle and part sales were up 0.2%. Again, we'll take any positive number we can get. Gasoline station sales up 0.4%, right? Now, I joked, weeks ago, actually probably a couple times saying, I'm getting about 3 weeks to the gallon because I hardly go anywhere because not much is open. And that's changed over the course of August and September. But certainly in the early part of the pandemic, nobody was using gasoline. Food services and drink places up almost 5% for the month of July. And that's a great datum for us to see. Furniture and home sales up as well. So while these are incremental and not huge jumps, they're still going in the right direction and what we want to see. We've shown a chart similar to this many times. Where are the winners and where are the losers? Non-store, auto parts. I find that one kind of odd because people aren't driving, but maybe they're just not taking their car in to be at service and they're buying the parts and doing it themselves. Building materials, because builders, and we'll see this later on in the program, just continuing to be on fire. But gasoline sales down, food and service, clothing. I mean, I had the chart last week showing, articles of clothing that are just being worn over and over and over again. I find myself doing the same thing. Maybe you do too. But we are seeing winners in this pandemic from a financial point of view, and that's basically what I do, but definitely losers as well. In fact, it's a bigger dichotomy in industries than I've ever seen at any time in my career doing this. And you can see it on the chart here. What's gaining? Wholesale clubs. For those of you that are in CG, have you noticed how well Costco is doing through this? Wholesale clubs, Sam's, discount stores. Fast food restaurants peaked for a while, now falling back a little bit. People are cooking their own meals. Commercial sports and athletic fields way down. Amusement parks. You guys aren't going to see Six Flags Over Georgia in your portfolios anytime soon, I guarantee you. That's just the reality of how the spending patterns have been. Now, this one is really interesting to me. So you're saying, well, when I listen to the news, I hear that it's taking a while to get back on track as far as retail sales. Well, let's look at July 2008. You see the yellow line there, or orange, whatever color it is on your screen. It took until October 2010 to get back to even during the last recession. Look at the dip from January of 2020 this year, way down to an 18% drop, and look at the skyrocketing change just in a matter of 6 months. I mean, folks, this is just a defying number, defying this pandemic number. This is very, very positive. It means that people's sentiment generally is very, very strong because they know we entered this pandemic from a point of strength. The economy was the best in history, arguably the best in the history of civilization. February 19th, the last high in the market before things broke up. So the Wall Street Journal survey here, the overall economy is recovering faster than many economists expected. Many are not expecting to see this third and fourth quarter equal where we were back in February. I showed this last time, spent a lot of time on this, I think it was 2 weeks ago, where the trajectory for a full recovery now is about July to early August of 21. So about a full year from now. That's a 19-month swing for this recession. That's going to be one of the shortest recessions on record. And technically, it won't even be a 19-month recession. But to get back to prior spending and GDP levels, that's what the current predictions are, 18 to 19 months from February. And I know that you guys are hearing in the news how badly the GDP has collapsed and that U.S. is handling this worse than any other country. As I've been telling you since March 12th, don't listen to the news. Listen to the data that I'm giving you. You can see in the left-hand lower corner there, this is quoted from the International Monetary Fund. Look at the size of the GDP drops in all of these countries. Which one has the shortest negative bar? The United States. The United States, and in fact, may not have the biggest recovery. Right now, Spain is going to possibly have a bigger recovery because of their seasonal activities. But still, the U.S. by far had the shallowest contraction of the major Euro nations, and that's a positive. So my buddy Jay Powell, chairman of the Federal Reserve, opens his speech 2 days ago saying the COVID-19 pandemic is causing tremendous human and economic hardship across the U.S. and around the world. How profound, Jay. Thank you. Bring something more than that to the table. Weaker demand and significantly lower oil prices are holding down consumer inflation. Well, the oil prices are weak because people aren't driving. So what's Jay going to do? Jay's going to keep pouring money into the economy. The Fed pretty much played their hand and said, believe it or not, we will not be raising interest rates for 36 months. Now, I'm not a gambler, but I've been to Las Vegas a couple times, and I've seen how people gamble. Imagine you pull up to the blackjack table and the dealer has to show you his hand for the next 3 years. If you have low interest rates, why in the world would anybody want to invest in bonds? And certainly putting money in CDs doesn't even keep up with inflation. That is bullish for stocks. And in fact, September is the worst month of the year for stock market performance, going all the way back to 1950. And even though we've had some rough patches this month, we're not anywhere close to a major pullback, in my opinion. But from my vantage point, it was not a stellar showing by the Fed from Jay Powell. And he continues to be vague. It kind of reminds me of Alan Greenspan, actually. The acknowledgement that the Fed will be guided by its judgment, which means they're kind of tossing aside their rules. And that's because there's not been a situation like this since the Fed was formed. Although technically the Fed was formed in 1914, the pandemic hit right at the beginning or middle of World War I, I should say, in 1918. But it's been 100 years since the Fed has had to react and adjust economic policy to a pandemic this serious. But 13 of the Fed members, that's in yellow there, have said we're going to have rates at 0 for 2023. And part of the reason for that is on this chart, where they just don't see any possibility that inflation is going to be a problem. Throughout my career of almost 30 years, I have heard people and clients come up to me and say, aren't you concerned about inflation? You've got all this money in stocks. Why aren't you concerned about inflation? And the answer has been, because I don't see an inflationary trend at this time about which I need to be concerned. And obviously the Fed isn't either. If you look at this chart, the black line is expecting average inflation around 1.7%. Folks, we need more inflation. Not 6 or 7%, but the Fed would really like to see a solid 2. Frankly, they'd be pleased with a 3%. But because of this pandemic and various other conditions, we're just not there, hence the low rates. So while many businesses were unprepared for COVID-19, sorry for the pun, Domino's delivered. A very simple change to their app allowed people to pull in that didn't want to have a delivery person show up at their place, or that delivery people didn't want to enter the buildings in the early days. And all you had to do was tap this button and it rang inside and you popped your trunk and they put the pizza in the trunk. Sounds like really, really simple, right? Well, their business jumped up considerably. They were down a little bit today. You can see the current price, but they have reacted to what's going on in this pandemic, as has Amazon, who's now stating they're going to have 1,000 delivery hubs in smaller neighborhoods, which will bring the last mile closer. So the last mile is when they either hand it off to a delivery service or the United States Post Office. Imagine what this is going to do to the post office, because if you can, find someone who's willing to drive it out there, and Amazon, as you guys know, is now delivering on Sundays, these hubs are going to grow to 1,500 over the next year. So as I have continually said, there are big winners in this pandemic, and there are big losers. We have a simultaneous bull and bear market here in America. And for those that think that you can just put your money into a mutual fund and hope that it's going to go up, that's just not the way that we invest here. And that's why we have a 26% return year to date in CG. I don't put the performance up here every week, as you guys know, but it's just very positive. It's just very positive. And you just have to be with the winners. You just have to be. Look at the recent planned hires. Well, the recent hires, I should say. And then in 2020, the planned hires, 1 million total employees for Amazon. It's just staggering. It's just staggering to me. Anyway, so, okay. I don't know what happened on this screen, but let me go back here and see. Okay, so, well, the name of this company is Snowflake, and apparently my slide program is playing a trick on me and had it snow on the slide. Now, you guys might be thinking that Snowflake is an apparel place for millennials, but that's not the case. They're actually a cloud company. And the reason I put this here is because their IPO leapt up 100% yesterday. It closed a little bit lower than that, but this is just like Amazon. It's just like Domino's. It's other companies that are doing well during this pandemic. Snowflake IPO is the biggest gainer on the first day in 14 years, in the middle of a recession, in the middle of a pandemic, in the middle of political unrest, in the middle of uncertainty about this election. The market wants to go higher. This is what it looks like being in a secular bull market. Home builder optimism, we've touched on this many times. We've now gotten over where the setting was in the early part of 2020. You can see the red dot that I put there. It's higher than at any time going back to 2010. The survey was for 78%. The actual was 83%. This is home builder optimism. Okay, traffic of prospective buyers. Why do I spend so much time on domestic residential sales? Because it comes in the consumer discretionary category. You don't have to have a new house. At least most people don't. All right, so since it's discretionary, it's the largest expenditure for most people. So if you can see that home sales are going well, that gives you a pretty good indication of the health of the market and the health of the U.S. economy. Look at this traffic number, just off the charts. People looking for new homes. One of the reasons is they have confidence. One of the reasons is because the Fed just keeps printing money and keeping interest rates low. They've already promised it now for 3 years. I wouldn't say they promised it, but they certainly have said that's what they're inclined to do. Anybody know who the Empire State is? Well, the survey was for 6.9. The actual was 17.0. The Empire strikes back. The Empire State is New York, and even with Andrew Cuomo, who is not a pro-business governor, that state, look at this rebound in 2020. It's really astounding to me, really astounding. And I think it bodes well for other large GDP states like California and Illinois, for that matter, that despite the leadership for the governors in those states, we are still seeing demand and production. And that's a great thing. It's a really great thing. So small business optimism, this is varied during the pandemic. And this is, if I look at the builders, they're definitely optimistic. But if you just look at all small businesses, and this is part of the reason why small caps, the Russell 2000 that I show you at the beginning of every section, every time we do this, There has been a nice recovery. It's not back to 2019 levels. And when we see that get up there, that blue line, then you're going to see the Russell catching up to the NASDAQ. And that's what we want to see. What's going to be the biggest reason that will happen? A vaccine. It's just that simple, a vaccine. So Americans saw their best economic gains in a half a century. This just came out, this data just this week. According to the Census Bureau, okay, I believe that President Trump is a pro-growth, pro-worker policy, I should say. Median household incomes grew at a stunning $4,400. So think about this. All-time record of $68,700. So that's the median. That means half of America is making family income of more than $68,700 and half are making less than that. But that increase is almost just unfathomable. 15% in 1 year. Okay, the largest gain on record for median income growth. And at the same time, which would make sense, the poverty rate plunged to an all-time low of 10.5. Now, 10.5 is still way too high for a poverty rate, but look at other highly developed countries like China, like India, and you'll see poverty rates much, much higher. Okay, that's a plus for the U.S. The mortgage market, we've been talking about this throughout the program and really throughout the last 6 months, recorded its best quarter in years this spring. Lenders issued $1.1 trillion in home loans. 1.1 trillion. I mean, it just blows me away. Lenders extended roughly 2.5 trillion in home loans all of 2019. This 1.1 was just between April and June. So this year, 2020 will eclipse 2019 unless for some reason there's a slowdown in the fourth quarter, which I don't see happening simply because of mortgage rates. Okay, look at the number of securities flooding the market. Thank the Fed for this, for keeping rates low, albeit printing money. Okay, median household income has continued to rise. Now, this is adjusted for inflation. So if we were in a high inflationary period, this number would not look like this. But this chart would not look like this. But why is this so important? I'm going to pause it tonight on recording. I don't think we're going to come off of zero interest rates. I think that may be a permanent interest rate in this country for the foreseeable future, as in maybe a decade. The only thing that could get this to rise is significant inflation, and I don't see that happening anytime soon. And that is a pro-growth environment for stocks and for earners. Even with the U.S. economy shedding more than 11.5 million jobs and $2 trillion in GDP, that's a lot, okay? But Americans aren't giving up. What are we seeing? Applications to foreign businesses have surged since the lockdown. 14% above the same period in 2019, 14% higher in business applications. Now, you might say, how is this possible? Because we saw the small business confidence. Well, there is a dichotomy there. And many of these businesses that apply and start up will not finish the year in business, or they won't be in business a year from now. But the main thing is the optimism is there. People ask me, what is the greatest asset that this country has? Is it our natural resources? Is it our government? Is it the work ethic? And I'll say, you know what? Our greatest asset is our belief in ourselves. And I know that sounds a little corny, but the reality is our confidence, each of us as individuals, is our greatest asset. And we bring that to the table as an aggregate in America, and that's why we have the success that we do. Okay? All right, moving forward here. Shipping containers. Probably should have put this earlier, but I like this data. You would think, well, what are we shipping overseas? I mean, hasn't COVID just ground to a halt all international shipping, or at least in great part, since we're not flying? Well, just because we're not flying doesn't mean we're not shipping. Look at this number. This number for July 20 is all the way back to July of 19. So yes, we've eclipsed where we were in February of this year to new highs. And on this chart, and I just literally got this chart about 2 hours ago, look at 2020 and this spike in the average rate ex-fuel exchange. Obviously, it's not including fuel here. But this is similar to other charts you've seen. I've never shown this one before, where when there's been a rebound this year in various sectors, and this happens to be an industrial sector because it's shipping, that it doesn't just bashfully emerge from the downturn. It catapults out of that. And again, that tells me that this economy is strong and it's bouncing back, not like it's been hit with 5 or 6 punches from Muhammad Ali, but whatever it was hit with, it's bouncing back strong. And when the economy does that, the market is going to do it as well. This will be the last time that I show, I think, the S&P 500 for second quarter earnings. We only have 2 companies left to report, and they're like the last day of September, so we'll see if anything happens between now and then. But 83% of these companies in the S&P 500 beat second quarter earnings projections. The normal prediction for this, the normal number, is about 73%. We are 10% higher than that. You can argue, well, the bar was set low. Well, perhaps. But 10% of the S&P 500 exceeding what their calls were 3 months ago for earnings. We'll start to see in the first and second week of October what the earnings reports are like for the third quarter. Get ready for blockbuster numbers, in my opinion. And if they are, that pretty much cinches things for November 3rd. And the reason for this is because I'm expecting double-digit GDP growth in the third quarter, which ends on September 30th. So, as some sectors and industries pause, and you guys, if you've been looking in your accounts, those of you that are clients, you know that we're in a pullback right now. Some industries and sectors pause, but others take over, and that is so important because for a secular bull market to continue, we need all aspects, all quadrants, all sectors, all industries of the market firing. They don't have to do it at the same time. But when others fall back, different sectors and industry groups have to step up. The more groups we see in these bullish configurations, the more the strength of this bull market plays out. And it may take some short-term pain, which I just talked about, and you guys have seen some volatility, those of you that are clients, but it's the long-term strength that's going to help our portfolios over time, no matter what we own, because as I believe, all sectors and industry groups of this market will respond over time. A secular bull market runs on all cylinders, even though they may not fire each of those cylinders every single month, all right? I believe we're in the early stages of a massive bull market that will last another decade. That's what I said. I believe this could easily take us into 2030 to 2033 based on the technicals that I'm seeing right now. How else can you explain that the S&P's move to an all-time high happened in the middle of a 100-year pandemic, in a recession, with social unrest, with a very acrimonious election? I mean, there's just really nothing on the fundamentals that should suggest that this should happen, but it is. Too many people simply confused, and this is the only time I bolded and underlined in this show tonight. Too many people confuse a healthcare crisis with a financial crisis. Don't do that. I'm not doing it. I'm telling you the truth. I'm showing you the data. Believe the data, folks. Believe the data. All right. 2020 has already seen the quickest, I can't even say this without laughing, the quickest bear market. It was 13 days. Do you remember 2008, 2009? It was a 13-day bear market. You know, from February 19th down to March 23rd, it took 13 days to rise 20% above that in the NASDAQ. It took a little longer for the S&P. But with one of the most consequential elections in U.S. history, just 6 weeks away, a little less now, and probably another virus wave going to hit, guys. Volatility in the markets will remain key, and that is the story as we head to November 3rd and ultimately December 31st. And we will be here covering this for you because so much is at stake. And one of the biggest things at stake, of course, is the election. So I can tell you that looking back to 1928, that's just about 100 years, the incumbent party has won 90% of the time if the market is swinging up. Now, right now, we're in a little bit of a pullback, but if this October traditionally is a little bit better month, actually a lot better month than September. And if we start to see third quarter earnings strong, and those are going to be coming out from February 6th or 7th all the way through the end of the month, it's going to be very probable that Donald Trump will be reelected. Whether that's good or bad for you, that's just the stats, guys. Most Americans predict that Trump will win the debates, so Tuesday night is the very first debate, right? Am I getting that? No, it's a week from Tuesday night. Sorry, guys, a week from Tuesday night. And 41% say that, Joe Biden will win. Well, we'll know. And frankly, we'll know in the first half hour who's going to win. I think that Biden has to have a really strong performance to get through this. I've been showing you these charts, and I'm bringing up various swing states as I do this. And this week I'm showing New Hampshire and Wisconsin. So New Hampshire swung in 2016 to the conservative side, and yet Hillary Clinton still won the state of New Hampshire. It was only 4 electoral votes, but she won it by about 3,000 votes, not much. Now, Wisconsin, on the other hand, swung far to the right, although Trump in that state won by about 32,000 votes. And it's still on the right side. So is it possible that Joe Biden could win Wisconsin? It's possible. But right now, the proclivity of the state is looking like it's staying about where it was in 2016, which would keep it a little bit in favor of the Republicans. This has not made the news. I'm sure you've seen it, but the news agencies aren't covering it because, well, you know why they're not covering it. This is a major deal. Israel, the UAE, and Bahrain signed a peace agreement. This is history in the making. They now officially recognize Israel as a country. Just yesterday, and this happened 2 days ago, just yesterday, Saudi Arabia, who didn't sign the agreement, but said we're going to normalize flights from their capital to Tel Aviv. We're just seeing incredible changes in the Middle East. Why is this important? Because if there's more peace in the world, that's one less thing to shake the stock market in the midst of everything else that's been happening. Okay? So this is very much a big positive. So I've highlighted various times here what these two candidates see differently. So I thought I'd show you something tonight, an area of policy where they actually are pretty close to agreeing.
Today, the President and the Pentagon, the Department of Defense are announcing a drawdown of troops in Iraq.
The Trump administration plans to reduce the U.S. troop presence in Iraq to 3,000, down from about 5,200 personnel there now. This is in keeping with President Trump's longstanding promise to shrink the American military footprint in both Iraq and in Afghanistan, and in this case, to make some of that reduction in time for Election Day. But it's easy to lose sight at a politically charged moment like this of the fact that both President Trump and his Democratic opponent in the fall, Joe Biden, the former vice president, actually agree on the desire to reduce the American military presence in Iraq and Afghanistan to as close to zero as possible. President Trump, of course, has been talking about this for a long time. He ran in 2016 on the idea of putting an end to what he called endless wars in the Middle East. One of his frustrations since he's been president is he hasn't been able to go further to reduce the American presence in Iraq and Afghanistan closer to zero. When he accepted the Republican nomination for a second term at the White House recently, he talked again about keeping America out of endless wars.
Endless foreign wars, wars that never ended, and keep America out of endless and costly foreign wars.
What's gotten less attention, though, is the fact that former Vice President Biden has essentially the same position.
It's long past time we end the forever wars, which have cost us untold blood and treasure. I have long argued that we should bring home the vast majority of our combat troops from the wars in Afghanistan and the Middle East and narrowly focus on our mission to deal with al-Qaeda and ISIS in the region.
In fact, when Joe Biden was vice president, he and President Barack Obama tried in 2011 to reduce the American military presence in Iraq down to 1,000 troops. That didn't work out so well because conflict broke out anew and the troop presence had to go up. But the point is that for Joe Biden, getting troop numbers down in Iraq has also been a long-standing desire and something he's promised before. So one candidate talks about endless wars, one talks about forever wars. Both are saying similar things. There are many things on which Joe Biden and Donald Trump disagree, of course, but on this one, they're more in agreement than not.
I found a little sorry about that. I found a little encouraging that they've got one area that they agree on, and maybe there are others, but in the debates we will certainly see that that is not going to be the case for all topics. So now for your question, guys. What is your current viewpoint as we approach this year's debates? Answer A, the debates will decide the election. Answer B, the debates won't matter to the election or my portfolio. Answer C, the election will be based on emotion instead of the debate performance. Answer D, not really sure what to think about it. And because of our delay here, I will continue to answer questions in the chat while you guys are answering this question. All right. What do we have here? Okay. B and C, they won't matter, be based on emotion instead of the debate performance. I think that's likely. K's with you on that. Debbie, hey Debbie, how are you? Based on emotion instead of debate performance, I think that's true. Even if there are no debates, and there are still people that believe there will be no debates, that there's going to be a last minute cancellation or something. I don't know that that's going to happen, but we'll see. A lot of C's here. Yeah, B for Tommy. Okay, thank you, sir. We'll see what happens. It depends. If there are no major gaffes, then it's going to be a neutral. If there are major gaffes on either side, you look back to Reagan and Mondale, and of course, that was a big gaffe on Mondale's part, and Gerald Ford versus Jimmy Carter in 1976. You're alone in your opinion, Karen. I'm guessing that's D, right? So I didn't see your typing above there, but well, guys, it's going to be an interesting time. You can find more information about us on our website. You can take that survey for risk management. You can take the survey for a financial plan. We did add this on our site. If you lose track of where our YouTube link is, just go to our page, cb3financial.com. You can also get there via cb3financialgroup.com or even just cb3.com. We make it as easy as we can for you. And when you get there, you'll see the YouTube link at the top, and that'll take you right over to the YouTube page. Every video all the way back to March 12th of this program is there, plus my Monday market mashups. You can subscribe to us if you're not already. A lot of subscriptions this last week. We jumped by about 30 or so. I was grateful for that. So CB3 Live is tonight, obviously. Monday, we have the Monday Market Mashup. We're on Facebook. We're on LinkedIn. And I tweet every single day, sometimes twice a day. So you guys, be sure that you click those buttons and subscribe. And anytime you want to like a video that you watch, I really appreciate it. It helps us with our numbers. Here are the ways you can find us. This hasn't changed, I think, in a few times, but if you're new to the program, you can do a screenshot on this and get in touch with me if you have any questions. Happy to answer something for you privately that you may not see or not be comfortable doing here in the regular program. I always end with this from 1 Timothy, for we have not been given a spirit of fear, but a spirit of power, love, and a sound mind. 2 Timothy 1:7. And it remains my deeply held belief that we will not only survive this pandemic and this social unrest and this election, and we will find ourselves a much stronger nation with a strong secular bull market that's going to last for quite some time. I'll be here guiding you through that. It's my pleasure and my privilege to do so. That's our program for Thursday, September 17th. I'm your host, Charles Brown, Portfolio Manager with CB Financial in Chicago. We are so glad that you have joined us tonight. Tell your friends, come back next Thursday, and we will continue from COVID to clarity. This is CB3 Live.